people out there right now that are saying, hey, my accountant, I don't want to say overinflates, but my accountant is very generous when it comes to the amount of gas expenses that we write off. And I think certain things like gas and auto or whatever it may be, those are like fixed amounts. So the IRS, I think, only gives you a cap. It gives you a cap on those. I think. I'm not a CPA. Please contact your CPA.
Right.
But let's assume for the past 5 years, I've been telling my accountant, hey, deduct as much as you possibly can because I don't want to pay taxes, as much taxes as I,
Right.
As I don't want to pay the taxes that I need to pay. Let's just, be very PC here.
Right.
But now I'm getting ready to qualify to buy a home, and now I might want to say, hey, this year, don't overinflate those numbers because I want to show a higher 1099 or a higher gross income. Does that make sense?
Totally. And that's a conversation I always have with self-employed buyers.
The interesting part is that the most important part of that is being prepared and planning 6 to 12 months ahead of time. Because that's not something, once it's done, it's done. Once you file it with the IRS, I mean, you can file amended tax returns, but for the most part, it's done. Your average person is not going and amending tax returns to clean up some of their...
That's right. And then they have to pay a big nut back to the IRS, which they're not prepared for that either.